How simple trading is for me to make millions. Before I even get started with this video, I'm going to put my money where my mouth is because I've been trading 7 years. I've made millions of dollars in trading FX, stocks, crypto, and a variety of other markets. And I put my money where my mouth is because I've had a free Telegram channel where I've shared a lot of my trades and analysis for the past 5 years. You can actually join this Telegram channel immediately right now by clicking the first link in the description of this video, and you can go see for yourself. I share all my analysis in here. I share my terminals, my trading screenshots, P&L, literally everything. Because I mean it when I say that trading is insanely simple for me. If you're doing more than like 5 to 10 seconds on a chart whenever you're trying to trade, I personally think you're doing way too much. I barely do anything in trading. I simply draw support resistance zones and I look for bounces of support resistance zones, and that's literally it. I have a unique risk management structure which allows me to profit even whenever I'm wrong most of the time in trading. I can be wrong 2, 3, 4 times in a row on a basket of trades and still make a net profit. And I literally show everything. If you're interested in that, you can join this free Telegram channel. But let's actually get into the details here because I'm going to get straight to the point. You can see the results live in my Telegram channel. I do everything live. I call my trades live to clients, things like that. I call actually exact trades here in my close friends group, which is a completely different, it's like a paid service I offer where I share the exact everything, lot sizes, trade terminals, planning of the trade management, the before and after, live screenshots of literally everything. And how is it that I'm able to do this? Well, it's actually pretty simple. I just draw support resistance zones and I buy at support and I sell at resistance, and I have a risk management structure that allows me to profit most of the time, even when I'm wrong. So let's go ahead and let me show you some trades that I've actually taken this week. There's a lot of people here on YouTube that will try to tell you that this is what they do and this is what this is how it works and this and that, but they don't actually show you the dynamics and they don't actually show you it live. I do both. You could see it live in my Telegram channel. You can follow it literally this week. You can start following it right now. You can scroll through my trades from the past few weeks and you could start following me going into next week, and I share all my analysis and stuff. And then on top of that, I'll show you behind the scenes as well, so you literally have it all. So when it comes to support resistance, you have to look at it this way. Price goes up and down. For whatever reasons that you think it's going to go up and down, it does not matter. You can have fundamentals, you can have the smart money concepts, you can have institutional, order block, bank manipulation strategy, whatever the hell you want. But ultimately, price just goes up and down. Okay? So support and resistance, there's no predictive power in support and resistance. There's no predictive power in technical analysis at all. Technical analysis just gives you a way to control risk. That's literally it. So don't think that you're going to be a god predicting where the market's going with just support and resistance, because you can't. I myself, after 7 years of trading, I'm only right about 50% of the time. Me using technical analysis is not the reason that I make money. The reason I make money is because of my risk structure. That is all that matters in trading. Simplicity and risk management. And so with this logic of price just moving up and down, when price gets to a clear resistance level where it's bounced multiple times in the past, I simply sell at the resistance level. I have what's called an invalidation if price gets past the level, which is the area that price would have to move to for my trading idea to become invalidated, for me to be wrong. And then if price moves down away from the resistance level, I just take profits. I don't try to be a hero. I don't try to cash the next 5,000 pip move. My average risk to reward ratio is only about 1 to 1, and in some cases maybe a 1 to 1.5 or 1 to 1.2. But I take profits on the consistent moves over and over, and I use very high risk so that way I can profit from the most consistent moves over and over and over and over. In the areas where price gets to support, I simply buy at support. I have an invalidation whenever price gets to the support level. And then if price gets to the support level and breaks past it, it hits my invalidation zone past the support resistance level is what I meant to say. And then it hedges me into a trade. I get hedged when you're in a buy and a sell order at the same time for the same position size. Then if it comes back to the zone, well, I could just simply get out of the first order at break even and I leave the sell order on. Then if it bounces there, it comes down. And if I'm wrong again, well, then it will hedge again whenever price breaks past the resistance level. And then if it does that, it's likely to come back and bounce at the support level again. So I can simply add another buy right there, close the sell at a small loss down here. And then if it price bounces from there, well, then I make profit on 2 trades, and then I had a small loss from the sell. All I do is I just trade support and resistance. It's just bounces of support and bounces of resistance, using hedging as a risk management structure in case I'm wrong. Because like I said, most of the time, even when I'm wrong, I still make money. So let me show you a trade I actually took. This was this past week, GBP JPY. Price broke above this zone. It came back to test the resistance level at support. And as soon as it got there, I just entered a buy. That's it. I had an invalidation right here, meaning if price got to here, that is where I would have been wrong. Because if price, obviously, if it moves below the resistance zone, it's obviously not bouncing. And the way that I structure this out, I'll literally show you the exact trade that I called in my close friends group right here. I'm long on GBP/JPY with a 3.3 position size, 200 pip invalidation, and a $5,000 risk, with a target simply at the previous high, and then invalidation if it breaks below, and I have alerts to manage it. And this is where I entered the trade right there. That's where I bought. Now the next day, price bounced. We ended up adding another position as price broke the next support resistance level and started bouncing. And now both of these positions are sitting in a very nice profit as of market close this past week. And then we also took 2 more trades. I'll show you these 2 trades as well. We'll go to the chart and look at it here in a second. Now, why did I buy here? It was just a bounce of support. It broke the clear resistance level right here where price had bounced as resistance a million times. Came back, tested as support, started to bounce. That's it. I just bought at support level. And then if it would have broken below, no problem. It'll get me hedged at a $5,000 loss. Then if it pushes back up to this zone, I'd simply close the buy at break even, may even add another sell with a new invalidation above this zone. You know, guess what? If it bounces right there, I took a break even on the buy and then I had profits on 2 sells, or worst case scenario, at least profit on 1 sell. And then it gets down in here to the next zone. If it gets there, I'll have an alert right here at this zone. I'll buy as soon as it gets here around these previous lows, really deep into the zone, and I'll simply buy. And then at this zone, I'll have a buy. I'll have an invalidation just below the level. You can use a stop loss if you like. I just get better results using hedging and scaling in and dynamic risk management. It's not complicated. It just takes some experience. And then if it bounces, then I'll make profit on that. And if it invalidates, then I'll get hedged. I'll wait for the next trading opportunity and I'll roll out of the hedged position in a net profit, like 95% of the time. It's just breaks and retests of support resistance levels and bounces of support resistance levels. It is just buying at support and selling at resistance. A trade that I am in literally right now is a buy on New Zealand dollar USD. Price is coming here into this support level and I bought. If price continues down further to the next support level, I will buy again. So if I'm right now, price will bounce up and I'll profit. And if I'm wrong, there's no problem because it'll come down to the next zone. I'll buy again. I've already positioned myself accordingly in terms of lot size to make sure this is not too big of a drawdown. Invalidation is all the way down here for a $5,000 risk. So if it gets into here, it's only going to be maybe like 3K of drawdown. And then if I buy again, adding another $5,000 of risk to the trade, I still have the same invalidation zone. So I'm at a 10K max risk for the potential to make 5 to 10K if it bounces up from there. I trade based on what the likely outcome is. I don't care what anyone else thinks about getting their 1 to 10 risk to reward ratio. I don't care. I want to take the consistent, relatively predictable moves where I'm right a good chunk of the time, and the moves where even if I'm wrong half the time, I can still make profit because there's a next support resistance zone or something else that I could use to roll out of the hedged loss. USD CHF. I'm in this trade right now. Why do you think that I sold? Knowing what you've just learned from me here in this video so far, is to clear resistance zones. Prices bounced as support a couple times, broke, tested as resistance twice, came down, now we're back at resistance. I've sold here at resistance. If price bounces here and comes back, I'll just put an alert right here. Because maybe if it comes down back to there, it could form an uptrend and start going back up again. I don't know. So if it comes back down to here, I'll be out in profit. But if it doesn't, if it continues up to the next zone, well, I'll just add another sell. I'll add to the losing position. Sure, you've heard that a million times. Oh, you never add to losers. I think that's idiotic. Usually, if you're adding to a losing position at the next area it's likely to bounce at, it is more likely than anything to bounce right there, provided that you've structured your risk accordingly and you're not risking too much. In this case, I have an invalidation all the way up here. All the way up here. So that means that I have plenty of room for price to move against me because I've used an appropriate position size. That if it gets to this next zone, I'll be in like a $2,500 drawdown. I can add another $5,000 risk position there. Then if it bounces there, I'll make a profit on the second position and I'll break even on the first position, meaning a net profit of at least $5,000 to $7,000. And I was completely wrong about the first position. And that's if this doesn't even work out. Half the trades just go straight to the profit target. Random chance, huh? And I still make money. This is another one that I'm looking to get in as soon as the market opens. I'm actually waiting for it to come a little bit higher. Now, what is this? Resistance, 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 support once, broke back through, resistance, resistance, and now we're here as resistance again. So the cool thing about this is that if price moves up, and I'm wrong, because I'm looking to sell as soon as it gets there. If this ends up continuing in an uptrend and it just continues ripping through the zone, it's no problem. I'll get hedged above the zone, and if it comes to the next resistance, I'll close the hedge order and profit. I'll add to the losing position. I'll add another sell, and then if price just moves back down to this zone, well, I can close that first sell at break even and the second sell in profit. If price goes up for a third time to the zone, I have a final invalidation right here. So that would only be my $5,000 risk if it gets there. It's a 400 pip invalidation. And I can simply add at this major daily resistance level where price is very likely to bounce. And then if it just bounces down a little bit to this next zone, I can close all 3 trades in a net break even, because this position will be broken even. Then the position at the top will be in profit, and the position on the bottom will be in loss. So it'll all average out to about break even. And guess what? I would have made profit on the buy hedges going up. My system is nothing new, and it's nothing special. It's just support resistance zones and then risk managed in a very particular way. It doesn't take a genius to do it. I am far from a genius. There's a lot of things in life that I am not good at and a lot of things that I can't do. But the reason I've been profitable for the past 5 years trading, in my 7 years of trading, because I lost money for the first 2 years and I really sucked, but I finally got it when I simplified everything. The only reason I've been profitable for the past 5 years of my trading career and made millions in multiple markets is because I keep things very simple and I control risk very well. If you'd like to watch me trade live and call out a lot of my analysis and trade setups here in the free Telegram channel, you can click the first link in the description and see it for yourself. I back up what I do and I practice what I preach, unlike a lot of people here in the trading niche. If you actually want to see the real deal, you actually want to see someone who puts their money where their mouth is and can articulate and communicate what it is they're doing, then I hope to see you in my free Telegram channel. Hit that first link in the description. Hope you have a great rest of the day. I'll see you in the next YouTube video. Cheers.